Good evening. Welcome to the Forex Pro Charts weekly trade results for the week ending March 27th, 2011. This week we're going to take a look at the trades that we did post alerts on. We're also going to take a look at the trades that you might think, wow, why didn't we post alerts on that trade? And we'll tell you why that was not a good trade and why we did not post an alert on it. First, let's take a look at the trades that we did post alerts on. One of them was the USD CAD, and we see here the 60-minute chart for the end of the week, and we see where price was dropping and came down. And right here we see where price hit the 60-minute armpit at 0.9696, came down right here, spiked, came back up, came up for 29 pips. Now this is just barely our 20 pip trigger, but if you follow our trade plan, then you would have captured that 20 pips, and then you should have moved your stop either to break even or to just below the 5-minute armpit to give yourself a little bit of a cushion. We've talked about a lot of times that price does come back, as it did here, maybe move just through the 60-minute armpit, come back up. Sometimes it will continue up, sometimes it will come back down. And it did that here when, again, this time it hit for 30 pips, and then it came down, and right about here was where we saw non-farm payroll this morning and price dropped. In this case, the CAD was going down, a buy was against the trend. When our trades are against the trend, we still can take the trades for the bounce off the 60-minute armpit, but we're much more likely to see a smaller bounce and to see then price move up a smaller amount and then come back down and go back through the armpit and down through the zone instead of continuing in the direction of the bounce. And that's what we saw in this case. So what we normally recommend that you do in a case where a trade is against the long-term trend is that you more aggressively protect your profits and move your stops more quickly. So again, you have to develop your individual trade plan and how you individually like to trade, and that's why we recommend that you demo fairly extensively before you actually take live trades, or that you trade on very, very small micro lots so that you can get a feel for what your particular preference is. But in this case, you would have achieved the first 20 pip bounce, and then with the trade being against the trend, most of you would have had your stop at break even, and the remaining portions of your trade would have stopped out. So that was the CAD. Let's take a look at the next one. Okay, our next currency pair is the UJ, and we see here where again price came up, came to the 60-minute armpit at 82.90, moved all the way up to the 5-minute armpit, came down just a little bit, back up to the 5-minute armpit, and then moved down here. This total move from here to here was actually 34 pips. So again, you would have seen a the first 20 pips fulfill, and then personally, because this would have already moved up to the 5-minute armpit, come back down and not achieve the 20 pip bounce, move back up to the 20 pip armpit, I would have personally moved my stop to break even right here, been happy with my 20 pips. And not risked any further loss where we weren't sure what price was going to do and where we felt kind of lucky to achieve our 20 pip bounce. So some of you may have done something a little bit different, but that's what I would have done, especially with this other zone right up here. Now, here we see price moving back up into this zone, which we had expected to be a good zone because of the presence of this weekly armpit. I believe it's weekly armpit running through it. And the small risk associated with this 60-minute armpit. However, what we see here is that price was coming up and approaching these armpits. This particular 60-minute armpit in this zone was at 83.80, and we see that happened at 6 o'clock this morning Central Time, which was just about an hour and a half before non-farm payroll. As you know, if you've traded long, non-farm payroll is one of the most anticipated news events of the month, but price can move very strongly in one direction or another. That's why it's anticipated for people who trade the news. But if you're not trading the news, we advise for zone trading that you not enter a trade that close to a major news event release. 2 hours is too close. Price early in the morning before the markets open often is fairly stagnant, and with non-farm payroll being released, you're very liable to see price spike one way or the other and blow through your zone if it spikes the wrong way, and it's fairly unpredictable. And that's what happened in this case, is that price went ahead and moved up, and if you had entered this trade, which we strongly recommend you don't, if you had, you would have had a loss. So we hope that you took our advice and did not enter this particular trade because of that non-farm payroll activity, and that you were able to capture your 20 pips right here and end up positive with that pair. Okay, and now we have the New Zealand USD. And again, the same thing. You can see price. Now, this is a textbook case of what we like to see happen. Price came up to the daily armpit and bounced. Some of our more aggressive and experienced traders choose to trade the daily and the 5-minute armpits as well. We don't recommend that, especially as you're beginning or if you're more conservative. But in this case, price moved up to the daily armpit, bounced, came up to the 60-minute armpit at 7634. And bounced for a total of 52 pips, then came back up to the 5-minute armpit, bounced again, and then moved up and through the zone. So here our traders, depending on how you manage the remaining portions of your trade, you would have gotten your pips at 20 pips on your first portion, and then price came back up. Just a little bit right here. Price spiked just a little bit back up, but didn't reach the 60-minute armpit, and then moved down for the total of 52 pips. So if you set your second lot at your daily armpit or at 50 pips, however you set up your second lot for your limits and to protect your profits, then you could have achieved a 50 pip profit. Hopefully on that second lot, and then of course by that time your third lot should have been at a break even and just washed out. So those were the three successful trades for this week. It was a total of 115 pip potential. If all you got was the 20 pips on each trade, then you would have had 60 pips. It's not as exciting a week as we sometimes have, but 60 pips is 60 pips, and because it is so predictable. That's the beauty of the Forex Pro charts, is that you can predict that 20 pip gain with a very, very high degree of probability. Now, let's take a look at some trades that did hit armpits, but we did not post alerts and we did not personally trade. And we'll go ahead and take a look at those and show you why we did not post an alert and why we personally did not trade those. Okay, first let's look at the Swissy. This is the USD-CHF, and we see here that price moved up straight to the 60-minute armpit at 93.37 and then moved very, very nicely back down, and looks like it had a gain of 109 pips. We did not post this as an alert, and the reason for that was the timing. This was right after non-farm payroll, and as you know, if you've traded for a while, the period of time shortly before and after non-farm payroll can be very unpredictable and a lot of volatility, and we prefer not to take that risk. There will always be another trade that we can take. Some of our traders do take the trades after the news event. In this case, if you had done so, you would have had a nice little gain. However, you would have had a higher degree of risk with that. So we did not post the alert. We try to post only conservative alerts where we are confident that there's a very high probability that you will at least achieve your 20 pips, and that if you've properly protected your profits, you will be protecting yourself from further loss. So we did not post this, and we did not trade this particular trade. Let's take a look at the next one. Okay, this is the GJ. Again, we had the same thing. Price moved up, 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 moved very nicely up to the 60-minute armpit, moved very nicely right on through it and right on through the zone. But as you see right here, it hit the 60-minute armpit, and this actually hit the armpit right on the news, and we would never take this trade right on the news. There's no way we would ever take this trade because, again, not only is the GJ one of the more volatile currencies, but the non-farm payroll is one of the more volatile news releases, and this actually hit right about 7:30 when the news was released, and that is why we did not place an alert and we did not trade this particular pair. And as you can see, if we had traded it, we would have had a loss. The risk was about 60 pips, which is a little, fairly significant amount of risk, especially for a more volatile pair. And there's no way with that risk and the timing that we would take this trade, and we did not post an alert on it. And finally, we have the euro, and we see that the euro here came up. This actually was within 7 pips of the 60-minute armpit at 1.4240. If you had taken this trade, it looks like you would have had a very nice little gain, actually, for about 171 pips. If you set a cushion, some of you set cushions and some of you don't. If you had not set a cushion and had waited, then right here at the end of the day, price would have come up and hit the 60-minute armpit, and looks like it bounced a little bit, maybe just barely achieved that 20 pips, but we don't really know which direction price is going to take. The reason we did not post this was because we already had price hit our 60-minute armpit back here in a previous week, and it came up here, bounced back down a little, came up here and actually hit the 60-minute armpit, then moved very nicely, and we had a nice trade off of this. Then it came back up and approached fairly close to the 60-minute armpit again, down again, back up. At this point, this armpit had been hit and approached too many times without moving far enough out of the zone. We had come nowhere near to reestablishing a 3-to-1 ratio like we look for and like is one of our most important odds enhancers. And while there's always the possibility that price will come up and bounce off this armpit for a number of times, we also have seen many times where price comes up, bounces, comes down, bounces again, and then moves up and through, or even down and moves up and through the second time. So these subsequent hits to the 60-minute armpit become increasingly risky, and the chance that price will move through becomes increasingly strong, and we do not trade that unless a significant ratio has been reestablished, and this price barely moved out of this zone, and there was nowhere near enough movement to justify us taking this trade again. So that is again why we did not post this alert, and why we did not recommend, and we ourselves did not trade either of these. It's very easy to look at something in retrospect and go, oh man, I should have traded that. Should have had that cushion. I should have taken that trade. Look, I would have had 171 pips. But the fact is that we become successful traders by increasing our probability and reducing and limiting our risk. And this is too much risk to take after conceivably 1, 2, 3, 4, 5 hits at or close to this 60-minute armpit with movement down after each one. That's just entirely too much risk to take. So we did not post this alert, and that is why. So that covers all of the trades and non-trades for the week. We hope you had a good week. We hope you achieved at least a 60 pip profit, possibly more. And we will be posting the analysis for the upcoming week this weekend, and we invite you back to the site to take a look at it. If you're not a subscriber, you can go for more information or to subscribe to our full analysis and charting services. You can go to www.forexprocharts.com. We look forward to seeing you there, and we look forward to having you as a subscriber on our website. Thank you. Have a good weekend.